I'm going to turn it over to our teammates that cover sports. One of them is Chris Morangi. He's the Chief Investment Officer, along with Kevin Dreyer, of our value team and our growth team. Another teammate is, which Chris will introduce, is a guy that unfortunately played football for the wrong school. I'm sorry, for the University of Miami. He's got a Heisman, and so he knows a lot about sports. Who's that? Oh, Gino Torretta. And Chris, we'll talk about that. Thank you. Here you go.
Thank you. Thank you, everybody. And we've already heard a lot about sports. We talked about sports last year on this panel. As a reminder, Mike Galiottodo has been with us for 16 years as a relationship manager. More germane to this conversation, he comes out of a family business, Galiottodo Sports Partners, which is the preeminent sports investment banking boutique in the world. And of course, you heard about Gino. Gino's actually been a relationship manager with the firm for 20 years, but as Mario said, probably better known as the winner of the 1992 Heisman Trophy and Davey O'Brien Award, and a quarterback for over 5 seasons in the NFL. So you don't look a day over 22.
Better
sure you
hair.
can get out there and throw a bomb. We've heard a bit about tariffs and taxes and recessions. Let's get to the important stuff. Who won the NFL draft this year? As part of that, why don't you tell us a little bit about the state of college athletics, in particular, what are these things called NILs, name, image, and likeness?
So the NFL won the NFL draft. In 1980, ESPN went to Paul Tagliabue, who's the commissioner of the NFL, and said, we want to put the draft on TV, and he thought they were crazy. There was 28 teams. Who's going to watch essentially 28 teams on a conference call make picks of college players? But so in 1980, it was the first time on TV. 2010, it was moved to national TV, a weekend event, and essentially the first round became a primetime affair. 2015, the NFL started traveling with the road show, and 600,000 people showed up in Green Bay, Wisconsin, to applaud their team's draft picks. Minnesota had the fewest picks in the NFL draft, 4. The 49ers in Baltimore had the most at 11. So for the local fans, the Giants and the Jets both had 8. So hope springs eternal that those are the 8 picks that they need to win more than a few games. So anyway.
The bar is low.
The bar is low for both teams. As Chris mentioned too, the other major change in the last few years is NIL. Essentially the courts agreed with a lawsuit that said college athletes should be allowed to be compensated for their name, image, likeness while they're in college. Of course, you had a massive change and there was no guardrails. So there's the colleges and universities are looking back towards Congress to put some guardrails in place, and there's another settlement coming. The House is going to settle where essentially the schools can pay the athletes directly up to, I think it's $20 million of revenue. It's going to be shared among football, basketball, baseball, and all the sports. So we'll see with those changes, but there's going to be a lot of stipulations that comes with it. With all of the obviously changes, the NFL is capitalizing. Pro sports teams are capitalizing. Live sports are, I would say, undefeated. It's kind of probably the only thing left that we all watch together at the same time. With that said, Chris, how can everybody in this room capitalize by investing in that sports theme?
Well, so obviously talking about sports is fun. To be fair, I could have fun talking about crop irrigation or convenience store sales, but what we're really here to do is make money for you all. And it turns out that actually the ownership of sports assets has been quite lucrative over decades. This chart here, we've taken the annual team valuations that Forbes does, aggregated them over the last 10 years, and the total value of all sports franchises in the Big Four in the US is around $400 billion. That would put it, if it were a public company, about number 20. Still only about 2/3 the size of Netflix, interestingly enough. But more interesting, those values have compounded at over 16% per year over the last decade. To put that in context, the S&P is up about 13% over that period. So why is that? Well, it turns out that sports franchises share a lot of the characteristics we look for in any business. Number one, their customers are their fans, literally. They're passionate. They buy tickets to go see games. They watch on every device. They buy T-shirts and hot dogs through good times and bad, young and old. Two, they're scarce. It's 30 baseball teams, 30 basketball teams, 32 football and hockey teams. Occasionally, there is some expansion. Those turn out to be bonanzas for the existing owners. But those two characteristics bestow upon teams pricing power. And we love pricing power and economic resiliency. One other dynamic I'd highlight, we talked about this last year, that we think will support the value of sports franchises going forward is here. And that is a growth in the universe of buyers for franchises. About a year ago, almost exactly a year ago, the NFL voted to allow private equity ownership of teams. They're now at 10%. That probably goes up over time. But it just adds to the institutionalization of ownership, which already includes private equity, hedge funds, and obviously wealthy individuals who are trying to find less correlated stores of value and are rushing for teams. Which is a good segue to my question for you, Mike. Why don't you give us a little flavor for what's been going on in the deal market, primarily the private deal market at the moment?
Yeah, absolutely. So demand for professional sports franchises is as strong as I've ever seen, and this was really reflected in a lot of transactions over the last year. In the NBA, the Boston Celtics were sold for $6.1 billion, which easily surpassed the previous NBA record of $4 billion that the Phoenix Suns went for. In Major League Baseball, the Philadelphia Phillies continued to sell limited partnership stakes, this time at a $3 billion valuation. And when taking into account the limited partnership discount, this would value the Phillies at about $3.5 billion in a controlled transaction, which would easily surpass the $2.4 billion that Stevie Cohen paid for the Mets just a few years ago. In the NHL, the Tampa Bay Lightning sold a majority stake at a $1.8 billion valuation. This was nearly double the $950 million paid last year for the Ottawa Senators. And last but not least, let's turn our attention to the NFL. When it comes to franchise valuations and media content value, the NFL is the gold standard. And this was reflected again in a number of limited partnership stake transactions this year, highlighted by the Philadelphia Eagles, who sold an 8% stake at an $8.3 billion valuation. That was at the time a record until last night it was announced that the San Francisco 49ers were selling a 6% stake at an $8.5 billion valuation. And with 10% of the New York Giants still on the market, I would expect that price to possibly be surpassed in the near future. Now, we discussed a bit about how private equity was now getting involved in the NFL. I would expect that to help fuel valuation growth and also provide liquidity for existing owners. So in the private sector, the business of sports is certainly booming. But Chris, I want to turn it back to you for a bit. How can an ordinary individual investor participate in these dynamics in the public markets?
So obviously that's what we're concerned with here today, and there are several ways. Obviously, sports heavily influences the value of the existing media companies, the arena and ticketing companies, of which we own a few. But there are a limited number of ways to participate directly. As shown on the slide, there is a chance to own two leagues, actually. Formula One, which is a John Malone Liberty Media entity. If you got here early enough, you might have seen the trailer for the film Formula One that's coming out around Independence Day. Brad Pitt, Jerry Bruckheimer, it's going to be what you expect. And then TKO, which owns Ultimate Fight Championship, UFC, as well as the WWE. And then there are some public teams. Of course, we talk about the Knicks and the Rangers, owned by Madison Square Garden Sports. Again, it doesn't really matter to the value of the franchise if the Knicks win tonight, but for other reasons, we hope that to be the case. And then a number of soccer teams globally, the most prominent of which is probably Manchester United, which is listed here in the US. I'd also mention one on the list, Club America, which was spun off from Televisa last year. It's the preeminent franchise in Mexico. And of course, dear to my heart, the Atlanta Braves Baseball Club, which actually is founded in 1871, the oldest continuously operating sports franchise in North America. And again, a John Malone-related vehicle. He has near hard control of that company. And at $45, it implies, after taking into account the value of the real estate development around the stadium, Truist Park, is probably worth around $2 billion. And we think, again, based on what Mike told you about the value of the Phillies, that the Braves are worth at least $3 billion, which would put the value closer to $60 a share. And we think that will get harvested at some point over the next several years, but for the moment, we're very happy to sit back and compound along with John. So that brings us to the end. I'm on time, Mario. I can talk fast too. But before we do that, I just want to reiterate the invitation to attend virtually or in person our Media and Sports Symposium, June 5th, here in New York. You can see we'll be reprising much of this panel with some industry experts, get into the weeds on some more of these items. We also have the Atlanta Braves Baseball Club president, Derek Schiller, presenting for the first time, and he'll have some very interesting things to say. So happy to talk about this at the Q&A or at the breaks, but want to thank you for your attention.
This podcast is an excerpt from the GAMCO annual meeting on May 16, 2025. GAMCO is providing these links as a matter of general information. We do not intend for these links to be a complete description of any security or company, nor is it a research report with respect to any of the companies mentioned herein. The analyst's views are subject to change at any time based on market and other conditions. The information in this posting represents the opinions of the analyst and is not intended to be a forecast of future events, a guarantee of future results, or investment advice. Views expressed are those of the analyst and may differ from those of other GAMCO officers, analysts, other employees, or of the firm as a whole. Because the investment personnel at GAMCO and our affiliates make individual investment decisions with respect to the client accounts that they manage, these accounts may have transactions inconsistent with the information contained in this posting. Certain GAMCO personnel may know the substance of the posting prior to its posting. This webcast is not an offer to sell any security, nor is it a solicitation of an offer to buy any security. Stocks are subject to market, economic, and business risks that cause their prices to fluctuate. When you sell shares, they may be worth less than what you paid for them. Investors should carefully consider the investment objectives, risks, charges, and expenses of the fund before investing. The prospectus, which contains more complete information about this and other matters, should be read carefully before investing. To obtain a prospectus, please call 800-GABELLI or visit www.gabelli.com.